China back grabbing the headlines, promising more stimulus ahead. We'll look at the details and what the market reaction was. Over the last 3 years, China's economy has been dogged by a property crisis, and that's caused developers within the sector to default, and you've seen households really suffer through sharp declines in property prices. The economy has been flirting with deflation. And you can see here on the chart in front of you that looking at the blue line, which is China's headline inflation rate, it's continued to be trend around zero. The latest figure coming out yesterday showed it at 0.2%, so very, very low, and is a reflection of the lack of demand within China. We contrast that with the US. US has had inflation well above 2%. Demand is exceptionally strong, and tomorrow we'll get the latest figure for headline inflation, expected to come in at 2.7%. So there's a marked contrast between the two largest economies in the world. Yesterday we also had what is known as producer price inflation. This is looking at the prices of goods sold by Chinese manufacturers. That declined 2.5% year on year. So prices of goods coming out of manufacturers in China are declining. That's negative for their domestic economy, but a positive for the rest of the world, with lower prices being exported. Chinese policymakers have been looking to address this issue of lack of demand and issues within the property market throughout the course of the year, and certainly in September they've been announcing multiple measures such as lower interest rates, making it more attractive for banks to lend and borrowers to borrow, but also spending more in terms of fiscal spending in order to really breathe life into their economy once again. Markets were initially excited by these measures. In September, we saw the MSCI China index increase by 30% in quite a short period, and then it gave back about 18% as optimism faded and the details within the measures somewhat underwhelmed. Yesterday, we had policymakers, we had the President Xi Jinping coming out with the promise of more measures ahead, looking to be more proactive in terms of fiscal spending, i.e. government spending, but also looking to take or embrace a moderately loose monetary policy stance. This is a change that we haven't seen since 2011. So markets actually taking this quite well. Yesterday, the market was up around just short of 3%. But time will tell whether these measures will be enough. There's still a lot of issues facing the country domestically, but also internationally, thinking ahead to next year with the prospect of additional tariffs from Donald Trump. That's everything from us today. Thank you for watching, and we'll see you tomorrow.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.